Good morning, all. It's the 20th of July. I'm from Signal Centre. My name's Joe Neighbour. All on my own today. No Steve. He's off this week. So I'll be running through some charts and latest headlines for everyone to give you an update on where markets are at. So a bit of a bloodbath yesterday. The S&P sank to, or had its biggest one-day decline since May. A lot of risk coming out of the market, it would seem, yesterday. And in terms of the latest headlines, in England, we lifted pretty much all restrictions. And US authorities are warning against Americans visiting the UK, citing a surge in cases that puts even fully vaccinated travellers at risk from contracting and spreading coronavirus variants. So little bit more to do, obviously, on this front, and a bit of criticism being levelled at the UK government, but we'll have to wait and see whether or not this is the right decision. But at some point, obviously, we are going to just have to crack on. In terms of what else is going on, there was the first major European bank to post earnings this earnings season yesterday. UBS announced better than expected second quarter profits. It added 25 billion in new fee generating assets in wealth management, taking advantage of rising client activity and soaring markets. In terms of cryptos, we saw a sell-off accelerate in Bitcoin yesterday, pushing below the 30,000 level for the first time in about a month. Other virtual currencies as well retreated, such as Ethereum and Dogecoin. European stocks are higher this morning, just bouncing back a little bit from the declines that we saw yesterday. We'll come onto the charts shortly, but overall there seems to be more concerns about the spread of the Delta variant, and that is dampening hopes that vaccination efforts will do enough to stave off another lockdown. Volatility indices rose to a 2-month high on the back of the sell-off yesterday, and also US 10-year Treasury yields tumbled back below 1.2 for the first time since February. So it's all go in the markets at the moment. Let's get stuck into some charts then. So I'm going to start with FX today, and this is the dollar index chart that you can see in front of you. It's a daily chart. And this continues to push higher. It's 4 consecutive sessions of gains, if you include today, which hasn't obviously finished yet, but going well so far. This red line on the chart is a gap that we created on the 5th of April to the 6th of April, which was filled yesterday. We did see some resistance take shape, but we're back up at that level again today and trying to test that to overcome that resistance level. Next level above that is at 93.43, which, if that overcomes, will complete quite a substantial double bottom pattern on the longer term charts. This is the weekly chart of the dollar index, and as you can see here, we've got these 2 bottoms in place. If we break above 93.43, we complete this double bottom, and we've then got a measured move up here at 97.66. So very much of the opinion that dollar index is going to continue to strengthen, but the next test obviously is this 93.43 level, which it needs to overcome. Looking at euro dollar, this is still on the verge of completing this head and shoulders top pattern that I've been banging on about for what feels like ages. So this is the daily chart here on euro USD, and it's obviously been continuing lower in line with this dollar strength that we've seen over the recent weeks. We've got this big area of support here that continues to hold at 117.81. We've had a couple of breaches below the neckline, but we haven't had a sort of real big close below it. So until that's the case, we are holding on here, and I guess that raises the prospect potentially of a bounce in the very short term. But overall, the outlook for me is bearish, and if we can confirm that with a break below the neckline of this head and shoulders top, then we can start looking for lower prices over the medium term. The next line of defense will be down here at 117.04, and I think if that gives way, we really do get some strong confirmation that the overall trend has reversed on euro dollar, and we are going to see lower prices. And the measured move of this head and shoulders top pattern, so from the head down to the neckline projected lower, comes in at 110.56. So some serious downside potential on that one if this head and shoulders top pattern does indeed complete. If we look at cable, that's quite interesting today. Range has been forming for a number of weeks, and we are at the lower end of that range at the moment and appear to be breaking down from the range. So this is today's price action. So we haven't closed below it, so there is certainly some potential for a bounce to occur and for the bulls to try and defend this level, but it is looking a little bit concerning. If we look at this from a range perspective and see that this has broken down, then we can look for measured move targets down here to 130.97. So, some serious downside potential there as well. And again, that will be happening if the dollar index can break above that 93.43 level. So there's a lot of markets that are all sort of coming together, and all going to sort of potentially break at the same time. What else have we got? So the yen markets have been quite buoyant as well, in the sense that yen's been strong because it's typically viewed as a safe haven. This is Aussie yen broken down from this big trading range that you can see here. So we had a fair amount of support around about these blue levels. These blue levels on the chart, they've given way, and now we're heading down towards this measured move target of the top pattern, which comes in at 79.16. Not actually that far to go on that now, and we've got a really nice completed pattern on that one on the daily chart. If we look at euro yen, since breaking this channel and then retesting it, it's now continuing to move lower, making new lows. No sign of that slowing down. Looking for lower prices on that as well in the very short term. If we look at sterling yen, it's a similar situation, rounding sort of top that's formed here, broken down through support and showing no signs of slowing. So more downside expected there, looking to sell into rallies. The other markets that look quite interesting, I mean, dollar CAD really is getting going on the upside now. This was trading in a big channel, as you can see here, which broke back here at the end of July, and since then, end of June. And since then, after a mini retest, we are pushing higher and breaking to new highs. Completed a bottom pattern there, I'd say, as well, and looking as though that's going to continue higher. So a case of buying dips on that one. That pretty much rounds up all the FX markets I wanted to cover today. Obviously, there is a lot more happening given the increase in volatility. Let's take a look quickly at Bitcoin, because that is on the back foot today. This is the daily chart. So as Steve's been talking about, he's been very bearish of this in recent weeks, because he's noted this big top pattern that's potentially forming. His head and shoulders looks something like this. So this is the left shoulder, this is the head, and this is a potential formation of a right shoulder. And we are testing this kind of neckline, I suppose, in and around this level here. I've got a zone of support which I've had drawn on this chart for a while. We've got 61.8% fib level at 27,175, and we've got this horizontal support at 30,000 that's done a pretty good job of holding the price up. But now we're below that at the moment. So are we going to run into this cluster of support here and find some buyers, or is this going to be the catalyst for a continuation lower over the medium term? It's not looking great at the moment. And obviously, where we're seeing money coming out of riskier assets like indices, we're also seeing money coming out of riskier assets like cryptocurrencies as well. That may be to fund other positions that aren't going so well. You can see that happen, where people will come out of assets that have done pretty well in order to fund stuff that isn't doing so well. So we have to wait and see how this plays out. But at the moment, from a technical perspective, it's not looking great. 30,000 still remains that big line in the sand. And if we can see a close back above that on the daily charts, then there is hope for a bounce in the short term. But it's looking a little bit hairy at the moment. Okay, looking at some of the commodity markets, this is oil, and it's fallen, quite substantially on the back of this OPEC deal that's happened. Again, spoke about this yesterday. It may be a case of buying the rumours, selling the fact. So now the deal has been sorted. They're going to pump more oil. Obviously, that's going to flood, the markets with more supply. Is there going to be the demand to continue seeing the price move higher? This is obviously the key question now. A big spike in volume, as you can see there yesterday. And since the break of this sort of bullish channel, we have seen the selling accelerate, and it's pulled back to this kind of key areas of support that I've got drawn on the chart between 65.10 to 66.40, which seems to be holding for now. If this can hold, then there is scope for maybe a bit of consolidation in the short term. I'm not going to say we're going to bounce back up anytime soon, but maybe we'll get some consolidation around this level if this support zone can hold. If it doesn't, then we're looking for a deeper correction in oil, and we'll start drawing on some target levels once that gives way. If we look at gold today, So we are below this resistance at 1844. Price action has been pretty good lately, but stalled a little bit in the last couple of days. Yesterday we posted this long-legged sort of hammer doji style candle. So a little bit of indecision with regards to gold. Probably not the best market to trade at the moment because there doesn't appear to be any sort of clear defined trend at the moment. I know obviously the channel is bearish, but if you look at it, zoomed out on sort of weekly charts, you could argue this is actually a flag style pattern that's actually taking shape. So mixed opportunities in gold at the minute for me. Let's take a look now at some of the indices. So let's first up go to the FTSE 100. Now, yesterday we broke down through key support at 69.47 and arguably completed a little bit of a top pattern here. Bit of a range that's been in place. The price action has been flattening off in recent weeks, but we've broken below. We're now actually looking for a retest now of resistance at 69.47, which that could attract fresh selling interest before another leg to the downside. Now I've got a 38.2% Fibonacci level drawn on my chart here, which is from these key lows here back in November to the recent highs that we posted on the 16th of June. And if we start projecting this trend line higher, then around this sort of zone we're going to have a confluence of support coming in together. We've got the trend line and we've got this 38.2% fib level. So for me, that looks like a natural level to try and target in the short term, and that would be just a healthy correction, healthy pullback within a bullish trend. So nothing wrong with that as far as I'm concerned. That will allow some froth to come off the top of the markets and for people to start rebuilding long positions for the short to medium term. So all okay there, despite there being probably some volatility and a deeper correction likely, but certainly not a disaster from a long-term perspective. DAX is a similar situation. Price action's really stalled in recent weeks. We're trading in this little range here, which has finally given way. We're seeing a retest of that today, so that could be a perfect opportunity for any short-term traders to try and sell into. That's at 15,278. Obviously, these things can overshoot from time to time, but I would be looking to maybe fade into these strengths, this strength that we've seen today in anticipation of a move to the downside. And in terms of where we'd be targeting on any type of correction on the DAX, again, I'd refer to the sort of Fibonacci levels to give us some sort of indication. This was the swing lows from October the 30th last year. Obviously, it's been pretty much one-way traffic since then. So we can look to use this level as a bit of a guide as to where price action could potentially go. And in line with this 38.2% level, we've also got what was a previous resistance level, as you can see there. Then we saw the big breakout. This now could act as support. So we've got a confluence of levels there to target, which comes in around about 14,100. So potential for a bit of downside here, but all in all, just a healthy correction, I think, within a long-term uptrend, and will allow some nice repositioning and to take some profits potentially if you are long in and around these levels and looking to take some profits on some things that have done particularly well. Looking at the US market, so this is NASDAQ, and we have seen a short-term break of trend. This occurred a couple of days ago on the 16th of July. We did see a little bit of a bounce back from the intraday lows yesterday, but a bit undecided today as to where we're going to head to next. Again, this market is due a correction. It's been pretty much one-way traffic for a very long time on these US markets. So don't be surprised if we do see some sort of pullback. Just sort of eyeballing the chart here, we've got these previous highs, which could act as support on any sort of pullback down to 13,884, maybe a little bit higher, these highs here. But we could easily see a pullback to these levels, which I think would just be considered pretty healthy in the grand scheme of things. And provided you're not over leveraged or in too deep with these markets at these levels, these pullbacks should be quite manageable before maybe another move to the upside. S&P 500, which is obviously the broadest index in the US, 500 stocks that it obviously tracks compared to the Dow, which is only 30, and the NASDAQ 100. So this is still holding on to trend support for me, although it is getting a bit of a going over in the last few sessions. Dip buyers do appear to have come in at some point yesterday to prop this up. Whether or not they'll see any follow through today on that remains to be seen. But if this trend line does break, then it could trigger a bit of a corrective move to the downside. But again, in the grand scheme of things, it's unlikely to be anything drastic. The trend is still pretty strong. Loose monetary policy is still in place, and obviously the Fed are being very supportive. So for me, any dip lower will ultimately be an opportunity to buy, but there's certainly no need to rush into it just yet. Okay, that pretty much wraps up where I wanted to go with the indices. Obviously, without Steve, it's not as comprehensive as usual, but hopefully, good enough for you guys to get a bit of a steer on what we're thinking from what's going on with the charts on a technical perspective. Okay, so gun to the head challenge. This is where Steve and I typically pick a trade every day that we feel, if we had a gun to our head, we would put our own money and think that we could maybe have a go at doing something good. And yesterday, I went short of euro sterling with a 22 tick stop, and unfortunately was stopped out on that one. It broke through resistance levels and got me stopped out. So -1R on that one yesterday after what's been a pretty good run for me, really. So 5.12R over the course of the last 4 trades prior to yesterday. So hopefully I can get back on the horse with this again today. So I've gone through a few markets there. The one that really sort of stood out for me based on when I was just going through it and talking about it then was the DAX. So this is the daily chart. We've completed this sort of mini top here with this sort of small range that's broken down, and we're seeing a retest into this previous support, which should now be resistance. So I'm going to try and fade the strength that we've seen today. I'm going to look at the intraday charts for just to try and finesse the entry a little bit. So this would be lower end of the range. We've tested that, as you can see, and stalled on the first attempt. So let's have a go at selling that, shall we? Let's get short now at 15,264. Obviously, volatility increased yesterday, so that means your stops are probably going to have to be a bit larger than usual in order to try and stay in these trades. But this is a sort of range that we're talking about. So in terms of a target, how I would usually do this is take a measurement of the range. So go from the high down to the low and then project that lower. And that comes in at 14,800. So looking for 3.45R on that one today. So a measurement of the range, we've broken down, we're seeing a retest, so looking for a nice technical retest of that resistance and a measured move of that range down to here at 14,800. So let's see how that goes. Okay, so in terms of news today, there's a few bits going on. We've got earnings from Electrolux and Volvo in Europe, which will already be out. Along with trading updates from EasyJet, Anglo American, and Ubisoft. In the US, we've got Netflix second quarter earnings. They're the highlight today. Obviously, one of the most popular stocks in the US for traders. So people will be keenly watching to see what goes on there. In terms of macroeconomic events, Thursday is really, where most of the attention is because that's when the ECB monetary policy decision is. Aside from that, the economic calendar is a little bit thin on the ground. The only thing of note today and of high impact is the US housing starts and building permits number, which is due out at 1:30. So keep an eye out for that if you're involved in anything US dollar related. The other news today is that Amazon founder Jeff Bezos is heading to space as he blasts off on his Blue Origin spacecraft. So I imagine that'll be quite well watched and followed, but obviously not likely to be market moving. So good luck if you're trading today. That sort of rounds it up for today. I'll be back tomorrow morning to run through the charts again. And in the meantime, trade safe, everybody. Have a great day. Goodbye.